Welcome back into Rex Rural Exchange on your Sunday morning. Right, let's see what's happening in the rural real estate market. And, of course, we're joined by the GM of Rural Property Brokers, Conrad Wilkshire. Good morning, Conrad. How are you?
Good, Hamish. Morning, Dom.
G'day, Conrad. How's things, mate?
Very well. Been a busy old week, attending a few conferences, north and south.
Yeah, you have been a busy man. We'll talk about the conferences in a moment, but let's just cut to the chase in terms of the market for both dairy and sheep and beef properties. How are things looking?
Look, overall, Hamish, it's pretty solid. It's both the sheep and beef sectors about 30% up year on year, and very similar levels for the dairy as well. And interestingly, on some of the volumes, if anything, a little bit back on last year. So if you take the dairy, it's 400 million ahead of the same time last year on maybe a handful more sales. So, you know, it's a $1.4 billion market now, doing around about 42,000 a hectare as a median price, up from about 32. So around about 10,000 a hectare up on the year on similar number of sales. So, you know, that's an interesting stat in its own. And similarly, you got the sheep and beef sector. If I tend to drop into that 200 hectare plus, similar numbers of sales, but again almost 400 million up on the same time last year at over $1 billion, that market there. And so interestingly, you know, that's gone from about 8,700 a hectare to 11,500 a hectare, and that's particularly that extensive hill country has been in strong demand over this last 12 months. So, you know, whether you're looking at it from a dairy perspective or sheep and beef, certainly numbers of sales are at similar levels, but the valuations are definitely up.
Yeah, interesting, Conrad. As I do, I tend to have the old sort of dinner party conversation with sort of farming types in the big smoke up here, and I quote you, you're 42,000. Oh, yeah, no, it can't be right. Oh, yeah. I said, no, I get it from the expert. I get it from in the know, you know, and it's fact.
I get it from Ryan. So, but the reality here is that's the median. It's obviously, so there's some interesting stories in and around some of these prices from region to region, and we certainly got a bit of that from our conference actually.
Yeah. Okay. Well, tell us what did come out of the conference. You had two. You had North Island and South Island.
Yep, we did. One of the things for me is, as I was looking at the North Island data, is that, you know, you've got a median price for dairy at 42,000 a hectare nationally, but if you actually have a region like Northland, you know, you've got dairy prices still there. You know, it's about 23 sales for the 12 months to April, and there's it's not even 20,000 a hectare. So while you've had a 30% appreciation and lift nationally, the Northland farms are tracking it actually fewer numbers of sales, and actually at similar values to prior years. So by any definition, a dairy farm at 20,000 a hectare in Northland has to be good shopping.
Yes, yeah, absolutely.
So we were just sort of getting behind a little bit of that.
Yeah.
You know, how do we support that market? And we've got some new players up there that are doing just that. But, you know, that, to my mind, there, you know, while Dom and I spoke a little bit about this earlier in the week, but while you've got climatic volatility in the north with some dry seasons, the same can be said for Hawke's Bay and Southland this year. So I don't think you can pin that on it either. I think fundamentally is an opportunity for those wanting to get into farming or scale into their own farm from a contract milking point of view. There just has to be opportunities up there at those levels because the payout's the same nationwide.
Yes, exactly. And if you've got your cost and your whole setup going well, yeah, absolutely. Yeah. It's a great opportunity when you put it in that light. Yeah.
Well, I mean, the case study for me in recent times has been season prior, we sold a large station in the King Country, and they had a dairy farm in Dargaville, but they weren't selling the dairy farm in Dargaville. They were going to keep that because it was a really cash positive asset. So, and they'd held that for a while. So it wasn't just based on some recent acquisition. So, you know, there is you know, some very good farming businesses in the north, and just shouldn't be underestimated in my view, particularly on the current payout. It looks really solid, and the contracts are good up there too.
That South Island conference, you were, you know, in the privileged position of being able to head to Wanaka, Conrad, which is wonderful.
Yeah.
You're showing a good time. Yeah, I do actually. Yeah.
So it's nice to visit, Dom, always.
Yes, exactly. Yeah. I hope you were showing around and showing a good time, you know.
We actually managed to get out on the water, but we didn't catch any trout, unfortunately. So obviously after a long day's conference, we got out there, unfortunately. So obviously after it was good. But look,
You didn't throw a potato over the side, Conrad, because that would have got
No. Yeah, let's not go there. No, but anyway, what did come out of that was we had some guys who were presenting case studies on their market and what was going on. And one of the case studies coming out of that catch-up was Mid-Canterbury. And we're seeing some really interesting consequences of the National Environmental Standards for fresh water and what the impact that's having on the Canterbury market, particularly for dairy grazing land. So at the moment, we've actually got sales that we've been involved with that have sold more than some of the tier one dairy businesses in mid-Canterbury. So, like we're now seeing 56,000 a hectare for dairy support land. And that's largely because of the rules and the consenting process that's required to run dairy grazing cattle, which almost seems a bit perverse to me because you're concentrating dairy cattle based on some grandparenting rules of the past, which is essentially what I'd have thought you want to do is spread the dairy grazing load as wide as you can to mitigate nutrient loss. Instead, what it's tending to do is, particularly under the rules that the irrigation schemes are having to operate under, and the interpretations of these things are very fluid at the moment. But what is certain is that if you haven't been dairy grazing in the past but got an operation that's well suited to it, you've invested heavily in some irrigation and the opportunity to earn a good return on dairy support, that's not available to you if you haven't really been had those kind of business activities in the past. Or certainly the consenting process is very involved. You'd never say never, but it certainly doesn't seem easy. And so the market at the moment is probably $10,000 to even up to $15,000 a hectare discount for those who have had that opportunity in the past and can represent it in their application. So it's I think there's some areas in there that need further work because, as I say, effectively you're concentrating it into a much narrower band of properties, and of course that dairy grazing isn't getting any cheaper at the moment. Now I think having the broadest possible net, and from both an environmental and an economic point of view, would make a lot more sense. But at the moment, it's creating a bit of a bias, one that's hard to reconcile when you see an improved dairy farm with a $2 million shed and state-of-the-art irrigation systems and all the infrastructure that goes to support a dairy system, and then it's got a dairy grazing block next door that could be worth more with about half the investment and improvements. It just doesn't seem to quite add up.
Yeah, that's an interesting point. This is the benefit of these conferences, eh? You get these little tidbits of information that just goes into the big pool of knowledge, and you're able to draw on that.
Well, what it's doing for us, one of the things we now know is that we need to invest more. We work with really good people in the market across the board, and Charlotte Glass has provided our team with a bit of support on environmental planning. And the one thing that really comes on every property, you can't generalise, and it just depends. And so we are now trying to work alongside vendors well ahead of time and do everything possible to make sure that all the terms and conditions that support their consenting processes is as understood as we can make it, and also encourage people to seek independent advice with these things, both from a selling and buying point of view. So that's one of the things we are doing now. So rather than wait for next season, we are actively working with professionals and having a few meetings to sit and train to actually affect that. And we're not the only ones. It's an industry issue, but Canterbury's a bit of a bellwether for the rest of the country because it runs quite sophisticated farming systems, and it's because of the irrigation systems, they do monitor things at a really significant level. And so, these standards I don't think are going to be unique to Canterbury, but I do think they're probably presenting there first. So it's, we see as an opportunity just having to get more advice and support alongside our vendors early rather than later.
Okay, right. Just on another topic, we had a bit of a good discussion over the last week or so around the depreciating New Zealand dollar. What impact is that having on rural property? Because it has a double-edged effect, doesn't it?
Well, I think the main one is it's keeping our exports competitive. So but how short-term that is, we don't know, because if our interest rates do track up, historically that's never been particularly favourable for our dollar, because we have, what is it, the Belgian dentists investing in our foreign currency from what happened in the 90s, etc. I think, so look, I'm no economist, and while I've got a bit of a banking background there, I'd say historically it's been a natural hedge as the dollar rose, our commodities tended to depreciate, and it's now. I don't know really. The bottom line on that, Hamish, is that at the moment, a weakening dollar for New Zealand dollar for us is favourable for exports, but how long that's going to continue seems very up in the air. I mean, there's a lot. The volatility in the markets at the moment is it's up there with the GFC. It's really hard to get a fix, and so I think farmers are taking sensible options around forward contracts, getting some external support on risk mitigation strategies that manage costs. They're all the sensible things that can be done, and really it boils down to that old cliche: you've got to just control the controllables and lock your margins in.
There you go. Okay, Conrad. Oh, sorry, Dom.
No, good to go. Good to go. Geez, you covered off a lot of ground there.
Yeah, absolutely.
Very interesting as always. Appreciate it.
Yeah, but is there sort of a bit of a recovery mode after conference season there, Conrad? Getting out and just watching a bit of club rugby in the breeze this afternoon, or
no, not quite. No. Still got the laptop on, Hamish. So
no, good.
And then hopefully tomorrow I get out on a bike ride around those men or two rolling down. So that's hopefully the weather's not too bad because it's blowing a hurricane there at the moment, I understand.
Oh, yeah, no. There's enough headwinds going on in the world without having to ride into one. yeah, good stuff. Okay, Conrad, there we go. Thank you very much. Conrad Wilkshire, their property brokers, GM of Rural.